It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Well, hello there. I see you are back again and again and again. You love Trading Stocks Made Easy as much as I do, apparently. Hey, it's Tyrone Jackson, the wealthy investor, and today we're going to talk about two stock picks that I recommended 5 years ago. Did you listen to me? I hope so, because you would be richer today if you follow my stock picks and follow my stock trades. And today we're going to kind of talk about like choosing winning stocks. I want to give you guys some behind the scenes methodology that I use to determine what stocks are going higher. Now, right before I do that, I'm going to take a second and come down on some of these guys and girls on YouTube because it's kind of been bothering me lately. So between you and I figured I'd complain for a quick second. We live in a market right now where everybody can have a blog. I support that. Everyone can have a YouTube channel. I support that. In fact, if you go to my YouTube channel, you can check all of my stock picks from 2, 3, 4, 5 years ago and see if I was correct or if you would have been profitable with the analysis that I provide. Now, I love YouTube for that reason. But I'm on YouTube the other day, and some guy comes up and he goes, "Hey, I'm Greg. I'm the best option trader in the world." Really? Like, you're so good at trading stocks and options that you have to announce that on YouTube? Like, how come you're not managing a $500 million portfolio for some hedge fund if you're good? So anytime somebody shows up in a YouTube video and says, "Hey, I'm Greg. I'm one of the best people in the world when it comes to stock and options trading," they're probably not the best in the world, right? Because the best people are working for some big firm like Goldman Sachs, et cetera, et cetera. And then there are other people who are credible out there, like me, who are really not into the, hey, this is how you get rich by next Tuesday. Because I find that people who want to get rich by next Tuesday don't make good long-term and short-term students. But the truth is, when you have the right financial education, when you have a methodology that's based on a balance between technical analysis and fundamentals, you can get pretty good at choosing stocks that have the ability to double, yes, double within a 2 to 5 year period. So that's what my expertise is. I'm happy to teach you the system because in 2 to 5 years, if I can help you turn $10,000 into $20,000, that's pretty good, right? If I can help you turn $50,000 into $100,000, isn't that pretty snazzy? And if I can help you turn $500,000 into $1 million over and over and over again, well, that can be done if you have the right skill set. So I want to start off with one stock that I recommended 5 years ago when it was trading at $107 a share. The ticker symbol is AMT. Some of you know it as American Tower. So when I make a recommendation on a stock, it's based, first of all, on top-line revenue. In other words, is the company constantly earning more revenue on a quarterly basis and year over year? If so, generally speaking, Wall Street will reward that stock by pushing it higher. Now, in the Wealthy Investor Program, and I'm sure you've heard me talk about this on this show many, many times, we don't marry stocks, we only date them. So what that means is if I'm buying a stock as a long-term hold, right, to build up my portfolio, it has to be based on fundamentals, right? If I'm trading a stock so that I can make more monthly residual income, it still has to have that quarterly revenue growth and that top-line revenue growth. So how many times, if you've ever binged on Trading Stocks Made Easy, have you heard me talk about this top-line revenue growth, top-line revenue growth? Because more than anything else, that's what pushes a stock price higher. So when I make a recommendation, I just want you to know it's not based on guessing. It's based on that balance between that revenue and whether the stock's in favor. Now, what makes a stock in favor? What puts it in favor? Well, AMT is in favor in part because of what they actually do, how they generate revenue. And they're essentially in the cell tower business. So for those of you who don't know, if you have a cell phone, that signal needs to be carried from one location to another. Well, since Verizon, T-Mobile, and AT&T can't own all of the signal, they actually rent space from companies that allow signals to bounce from one location to the other. It would be very expensive and inefficient for some of these big name cell companies to actually build towers. So it's like rental real estate. So they'll have their signal strategically in one place and then a couple of blocks away, another place, and then one country, et cetera, so that your cell phone signal travels around the world with hopefully a smoothness to it. Well, if you're renting space from a cell tower company, what's going to happen? You're going to sign a contract, and the more towers that you rent, the more money you have to pay that company. Well, if you look at American Tower, AMT, 5 years ago, because the trend of cell phones are not going away, when the shares were at 107, I said, hey, good time to start building a position. The shares at the time of this recording, right before Thanksgiving in November, currently at $257 per share. Why am I being so transparent with you? Because I want you to know and I want you to have confidence that there really is a methodology for choosing stocks that go up 100%. Now, I always joke, especially when I'm teaching live, I say, how many of you went to the fourth grade? People raise their hand. And then I say, how many of you completed the fourth grade? That's good, because all wealth is essentially fourth grade, fifth grade, or sixth grade math, depending upon the city in which you went to school. But you don't have to be a genius to know if you buy shares at 107 and 5 years later the stock is at $214 a share, expressed in percentage terms, that's 100%, right? Cool. That's the pattern that you and I want to be able to get really, really good at, because that's how we make our money, understanding the analysis behind what causes a stock price to rise. So, do I think it's time to buy more shares of AMT? I sure do, but most of you don't want to go out and spend $257 per share, especially if you're just starting in the stock market. Believe me, I understand that. Again, today's show is just to let you know that when you perfect a methodology, you can apply it to any stock and determine whether it's going to go up 100% or more. So how do we know based on fundamentals that the stock price is going to go higher? Because the companies who sign a contract with them have a 5 to 10% annual increase in the price required to carry that signal. So therefore, when contracts are signed with big publicly traded companies, what happens? Increases are built in. And if there's an increase built in with each and every one of your clients, that means your annual revenue over a few years is going to rise. That creates demand for the stock. Do you see? So it's not a guessing game. It's not enough to use social media to go, hi, I'm the greatest stock picker in the world. But if you have a methodology that's based on revenue and technical analysis, then you get good at predicting stocks that will go higher. Okay? And me, as your favorite wealth coach, teacher, and friend, want you to learn this methodology inside out. Why? It's proven over time, and it'll never stop being about top-line revenue for Wall Street investors. Now, there are a couple of other nuances, like the size of the float. That matters, right? Whether the company pays a dividend, that matters, because those are some of the things that institutional investors, college endowments, hedge funds are attracted to. But today's show is more about an overview and not nuances. But I will tell you this, if you want to get rich from stocks, you better commit to learning these nuances, because as your account gets bigger and bigger and bigger, you want to be better at superior stock selection. Ooh, how about that? All right, let's move on to another company that I predicted would double in 5 years, ticker symbol EL, also known as Estee Lauder. Now, I'm going to tell you that this stock 5 years ago was trading at $79, and now it's trading at what? $350 per share. Now, $79, basically $80 twice is what? $160. So this went over the 100% that I shoot for, and I stand by that. Okay? Now, let me explain to you what's happening here, because a lot of the fellas didn't want to purchase shares of a cosmetics company. what a lot of people don't know and what doesn't make the news, there are fantastic stories out there, right? Estee Lauder is the name of the company, ticker symbol EL, but what brands do they own? They own Clinique, Bobbi Brown, and a series of other brands. They're basically the Amazon.com of the cosmetics business. So when you walk into Nordstrom or Macy's, 80% of the brands that you may see are what? Estee Lauder owned. So if you've ever played Monopoly, what does Monopoly literally mean? It means one, many, right? One, many. Mono, one, and then many, one. So one brand that owns many brands. So I won't mention a lot of names, but this happens also in the insurance business. The same thing that we've seen here, where there's one brand that owns 15 brands. So when you walk in the store and you think you're making a choice, guess what? You're paying the same company. We see this in insurance companies when you're watching television. You could be seeing a commercial or 2 or 3 commercials that look like it's 3 different brands. And it is. But it's owned by what? One company. And to put it in economic terms, that's what allows a company to have market share. So even though the brand names may be different, if it's all going into one corporate coffer, that company is going to dominate market shares. So let me teach you a little bit more about investing, okay? And don't take this the wrong way. It just happens to be an example that works. In the funeral home business, if there's a funeral home in your town, you may have noticed that there are 2 or 3 funeral homes within, let's say, a 20-mile radius. In the funeral home business, most of the funeral homes are owned by the same companies. It's just the names change. Now, unless you do investigation, you don't realize that. So there's really, in the funeral business, really like 5 companies that run all of the funeral parlors, or at least 88% of them, around the world. Of course, when you're grieving, you're not thinking about who owns this business, but they figured out a way to have, 80-90% market share. You see, buying and selling stocks is not just about trading and how quickly you can buy and sell a stock or sell covered calls for weekly calls. No, that's one part of the game. The financial education is understanding where the revenue is coming from and why this stock, in fact, has the greatest probability of going higher. Now, let me tell you this. This is a financial education you should have gotten in high school and college, or at least in grad school. Most people don't. That's why most people trade time for dollars, because they don't have the education to be rich. But one of the things I'm most proud of about this show is you can tune in every week, and there's at least a different lesson on what's going on in the market, what stocks move. I have my students on. And you can learn for real what drives your favorite stock price higher. A little bit more information about how to choose winning stocks right after you take a listen to this.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Welcome back. Okay, right before the break, I was talking about a company named Estee Lauder and all the brands that they own and how they actually have a portfolio of brands. Remember I told you 5 years ago the shares were trading at $79? Well, just to make the math easy, $79,000 invested 5 years ago, the shares we know are at $354. Your $79,000 investment is now worth what? $354,000. Now, did your house go up at the same rate as the shares in this company? Probably not. $790,000 is now worth what? Over $3.5 million. So you know when I'm talking to you about being rich and having financial freedom, well, if you can pick stocks that at least will double every 5 years, guess what? Those are fantastic numbers. Now, success is nothing but a series of positive habits, right? So if I can teach you or pass on this information to you about how to choose winning stocks, what's going to happen in your life with 100% certainty, you are going to create financial freedom. But you cannot pass on an education that you don't have. So if I pass on this education to you, what does it mean to your children, your grandchildren, your nieces, your nephew, your parents' portfolio? So many people come to me and start managing their parents' portfolio to great success. It all comes from that education. Fast money in the stock market is not just about trading. It's about being able to make the right decisions. So that deeper level of education that you are going to need is this. You need to understand what stocks are in favor in the marketplace right now. And that means what stocks are out there that Wall Street likes. And it's not you and I who push a stock price higher. It's the entities that can go in and buy 6 million shares a day. Really, we're riding along with them. And if you think you're making the stock move on your 50 shares or 100 shares or even your 500 shares, the answer is, oh, no. No way. That stock price cannot go up without a major buyer buying shares consistently. Now, here's the enormity of the stock market and why it's a wonderful game that you can get in on. When I talk to you about buying 500,000 shares, do you have any idea how many institutions from around the world buy in 500 share lots? Not just in the United States, but there are banks in India that trade in the U.S. stock market. There are banks in Australia that trade in the U.S. stock market. There are banks in the Caribbean, China, Japan, all over the world participating in our market on a daily basis. Don't you want to, in effect, partner with those institutions and purchase the stocks that they like? Before I became a stock market trader and investor, I used to hear people say, I have a feeling about this stock. And that was like a trusted device. My feeling tells me that the stock is going to go higher. Well, I'm here to tell you it's not your feeling. It's the fundamentals that make the stocks go higher. Save your feelings for your love relationship with your boyfriend, your girlfriend, or the person that you're married to. That's where your feelings should be. When it comes to the stock market, it's all about revenue and technicals. And one of the technicals that we constantly adhere to is what institutions like in this market. Now, I'm going to tell you now this next thing that drives up stock prices, which no one will ever tell you, including that guy on YouTube who's the best stock market trader in the world, is that certain companies have certain partnerships. So, for example, if company A could use company B's marketing time on TV and radio, and they form a partnership, that is $1 billion partnership. Because if you own Company A and you can't afford TV and radio time, but your partner has leftover TV and radio time, that can get your brand exposed to millions and millions of people per night. So partnerships are really important. Who finances the underwriting of the company? In other words, what investment bank brought this company to the public market? We've done other shows on this. Investment banks bring companies to the public market, and they have what? Certain strategic relationships. So if I'm an investment bank and I bring you to the public market and I have a firm that has helped another company with its advertising to become a multi-billion-dollar company, what's going to happen to that stock if the revenue shows up? It's the behind-the-scenes partnership that drives top-line revenue and does what? Brings expertise to the table. Now, there are about 5 other nuances that you need to know, but I am running out of time for this show. But what I hope your eyes open up to is this is a huge world and a huge game. And you can become good at it. Why? Wealth is nothing more than a series of positive habits mixed with a financial education. It's time for you in your life to move forward and learn and perfect the system that I have to share with you. Hey, listen. It's very common these days for stocks to double in value every 2 to 5 years. But again, if you don't have that education, you are locked out of that game simply because you don't have the right information. Don't let that happen to you. Stay open, stay positive, keep a clear mind, because all the wealth that you desire is right there before you as a trader and investor. It's Tyrone Jackson, the Wealthy Investor, saying, I'll see you on the next episode right here, Trading Stocks Made Easy. Bye-bye now.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.